What's going on, everybody? Thank you so much for checking in. In this video, we're going to go over SPY, which is the S&P 500 ETF. And we're also going to go over some other notable names on the market, such as QQQ, Apple, NVDA, Tesla, AMD, and Amazon. And finally, we're going to cover a little bit of VIX just to see where implied volatility is right now and how that affects the options market. So in this video, we're going to do things a little bit differently. I know most of us are used to checking in, and I usually have these levels pre-made for you. But in this specific video, we're actually going to go through the creation together. All the levels that we've created in our last videos, which was just posted about 4 days ago, they will stay on the chart, but we're going to go in there and we're going to see how they followed through, and then we're going to update them as needed. So in this case, we're going to start off with SPY, and we're going to start on the daily candles in this case because we always like to start with the macro picture before moving into the micro picture and seeing what's happening on the shorter term charts. So overall, SPY has done a fantastic job this week maintaining last week's high. We do see that the stock, or in the index in this case, is consolidating just above its 50-day moving average, and it's trading just below this strong rejection right here. On our video on Sunday, we talked about this rejection, which was right around 438.60. This is the level that buyers need to regain in order for them to regain the overall trend. So right now we are still making lower highs, and we have been since we fell back in July. You can see we've made lower highs, and now we are flirting with potentially reversing that trend. And if we do, then it's looking like we're going to rally through the end of the year, and we may have a Santa rally on our hands. So we can clearly see that there's a lot of bullish pressure, and we have maintained last week's highs. In fact, we did not change much about SPY's chart since our video on Sunday. These are the same levels. The only thing we've added is this support right here, in which today it tested, and you can see that it bounced right back off of. Right now, SPY is creating what is known as a bullish flag pattern, and this is what it looks like, where there's a strong rally and then it kind of flags or moves sideways for a bit, which we indicated would happen because markets needed to cool down before pushing again. But you notice during the bull flag that it's creating, the entire time it's maintaining the highs and not giving back too much to the lows. So this is a good sign for buyers, and it does mean that we are close to breaking out. Now moving on to the weekly candles, let's go ahead and zoom out a little bit further. We can see that last week we booked a very strong bullish week, and it regained the 10-day moving average, but we are still below the 20-day moving average. And the reason we want to point this out is because, very interestingly, the 20-day moving average is also trading at 438.60, which is the same price point resistance that we saw at this rejection here, which means that 438.60 is a very, very critical line. Most of the time when you have a very critical resistance like this, the first or two times that it attempts a breakout above it, it will fail, but then it will need to gather more traction in order for it to push. And our bullish price target above that point is going to be between 444 and 445. We will be taking calls officially with our group. If you're a member of our community, look out for those calls in our alerts group over the next few days. We will select the proper strike and expiration for them. Now to the downside, just because we are bullish, it doesn't mean that it will follow through as bullish, of course. So we have to always look at the downside. Now to the downside, we have a critical support at 429.84, which is also a pivot point. If we break below that level, then buyers may lose confidence and they may break us back towards a bearish follow through. So if we break below this, we may test this, and then these are our downside price targets. In that case, we would be looking to play puts. However, we are leaning bullish. The options market is indicating very strong bullish trend on most technology names. You can clearly see that in the money calls for names such as Microsoft, for example, have a ton of open interest compared to in the money puts. So in the money puts have almost zero open interest. Yes, out the money puts have a lot of open interest, but as of right now, it's looking like the whales, or the big buyers, are focused on the call side across the technology sector, which is the largest sector in the market. So now let's move on to QQQ, which is the tech index. Let's talk about its weekly candle, and you can see like SPY, QQQ regained the 10-day moving average, and it also regained the 20-day moving average. In fact, it opened above it this week, which means that there are no moving average resistance points in its way. So now we know what it's doing on the weekly candles. Let's talk about it on the daily candles, and you can see that like SPY, it is also forming what looks to be a bullish flag. Now, just like SPY, how we said there's a critical resistance, this is the critical resistance for triple Q, and you can see that it's struggling right at it. However, it's still maintaining that level, and it's looking like these moving averages are about to cross up. The MACD is also crossing up, and the histogram is also moving into green territory. And you can see that on the relative strength index, there is more relative strength now than there was at this high right here, which indicates even a more bullish signal. So here are some levels to watch for triple Q. Again, we have not changed these levels, so these are still resistance points, but we're about to update them. But you can clearly see we had a video last week on Wednesday updating triple Q. Our resistance at that point was 357.50, and we said we would be willing to take calls above 360.25, and these would be our price targets. And lo and behold, you can see triple Q's follow through all the way to 373 within just a matter of a week. So these resistance points are working, you guys. You need to have them on your chart. You need to follow levels throughout the week in order for you to trade successfully. You can even see that on the 370.50 breakout, triple Q broke out, it got rejected right at our critical resistance, and when it retested, it bounced. So over and over again, we tell you guys that when it comes to resistance points, if a stock breaks above a resistance, that resistance should automatically turn into a support, in which in this case, you have the proof right here that this resistance turned into a support and triple Q maintained it. So let's clear off all these resistance points. The only one we're going to keep is the 370, 375, and we're going to plot some resistance points together to see where the market is going next, or where triple Q is going next in particular. So if you guys are wondering why I use two systems here, I like Thinkorswim because I find it more accurate in terms of levels, and I can see the pre-market and post-market hours a little bit more clearly. But I use TradingView to plot all my levels because I do like the way that they plot levels. So here in this case, we have triple Q's first resistance at 373.75, and if you're wondering where that came from, this is simply the rejection that we saw here, and so triple Q needs to break above that level in order for it to continue its rally. Now our next price target is going to be where there was a resistance in the past. So if we look back, we don't see much resistance here until this level right here, where you can see there was a large rejection and then a sell-off, which means that the top of this sell-off, or this full-bodied candle, is going to be the first price target we have for it, which is right around 376, and so that would be our next resistance right around 376. And then of course on top of that, we have the rejection itself right around 378.10, which is not much of a gain, but nonetheless it is still a gain. That is still a $5 gain, and if you are trading options, or if you will be trading options with us, you will see that these are very large substantial gains that we can make from this. So this is going to be our bullish range, and we're actually going to extend this bullish range in just a little bit, but for now this is our breakout range, and this would be our price target. In fact, you can clearly see the rejection here. Now to the downside, we have the support at 370.55, so we're going to place a support right here, and in fact we are going to extend our bullish range down to this level. So as long as triple Q is holding this level, we are okay with it, and even if it dips slightly below it, we will give it some breathing room if we are holding calls. And that's why we always like to take a longer expiration, especially for our swings, because many times you will find that markets will try to shake you out before the real push comes around. Now below that support, we have another support around 366.80, in which we're going to place a support at, and that's going to be at 366.80. Now we're okay on the bullish side as long as triple Q holds this. Of course, we would love for it to hold the 370.55, but most importantly, we need it to hold 366.80. Now a break below that can turn very ugly very quickly, because as you could see, this rally is nearly vertical. There's not much support, and so there's not much support until right around 360. And so we desperately need it to hold above this level, in which we are going to mark a critical support. Now, if it breaks below that level, then we would consider taking puts down towards that 360 mark, which would be our bearish area. And of course, if you are taking puts below this break, you need it to stay below this break in order to maintain the put position. So that way you can have a stop loss right above this level. Now the next stock on our watch list is going to be Apple. To be quite honest, we are disappointed in Apple's recent earnings. I have not personally been bullish on Apple for quite some time now, but we will play the trend as it goes. And if the market is rallying, there's a very good chance that Apple will rally with it. But right now, we are kind of staying on the sidelines when it comes to Apple. Of course, our long-term positions still hold Apple. We are still very much bullish long-term. But for the short term, we believe that Apple needs a little bit of a groundbreaking product or groundbreaking sales in order for us to continue believing. Now you'll notice that just like QQQ, we have not updated this chart. The reason why is because we simply want to show you guys how our levels followed through from our last video. And then when we update them again in the next video, you can see what to expect. So here in this case, Apple, you can see that we had a resistance at 178. Apple broke above this level. So in just the last few days, Apple managed to break above this level. Notice that upon the breakout, Apple dipped back, retested that 178, which means that this 178 can now turn into a support, and it bounced, broke above the 182.35, and right now sitting right at that resistance, which means that we'll take this off. We're going to lower our support just a little bit because you can see that there was a double bottom bounce right here. So right around 181.50, we're going to place another support. And this is going to be our bullish range, you guys. It's as simple as that. Now, as long as Apple holds the 181.50 level, we are bullish on it. The next resistance is going to be 184.80, which is going to be our next price target. And above 184.80, Apple does not have much resistance. You can see that it can fill this entire bodied candle all the way back up towards 190. The next stock on our watch list is going to be NVDA. NVDA has been one of the strongest stocks on the market, and it has been almost all year long. Now, NVIDIA's call flow is very interesting because we can clearly see that the market is very bullish on NVIDIA. You can look at the call side and you can look at the put side. On the put side, there's almost no open interest when it comes to in-the-money calls. However, in the money puts. However, on the in the money call side, there is very strong open interest. Yes, some can argue that there is 10,000 open interest on the 445 put. However, that's only a $40 put. So that means it's not that substantial in terms of sizing. But when you look at the call side, this is a $1,600 call, yet it still has 10,000 in open interest. So that tells you that the big whales or the Wall Street traders are definitely betting bullish because retail traders simply can't afford these calls, at least not the usual or the average retail traders. So here in this case, NVIDIA is looking very bullish. As you can see, it is also breaking out of what seems to be a bullish flag, but just like the rest of the market, and they're not making it easy for people, NVIDIA is also on the verge of making that lower high. So just like SPY could be on the verge of making a lower high and get rejected right here, NVIDIA is doing the same thing. And this is why right now it is such a tricky environment. And so if you're not catching a lot of plays and you're scared of it potentially making a lower high, that is completely fine. Play it when you're comfortable with it. But until then, let's go ahead and see what we can expect from NVIDIA. So on our video from the last time we covered NVIDIA, which just about the last week, we can see that NVIDIA has broken above our 455 resistance. The first attempt above 455, you can see there was a strong rejection. NVIDIA came down, and it looks like it bounced right above where this breakout was. So this was the breakout level. NVIDIA came down to retest it. So we're going to put a support right around 448. And we're actually going to move our bullish range in this case towards 448. So as long as NVIDIA holds 448, that is going to be our support. Between 448 and 463, I'm not seeing much support. In fact, I don't really see much here in this case at all. But let's go ahead and see what Thinkorswim has to say about that. You can see that there is potentially a support right around the 459.70 level, which was this strong buy up. And then you can see that it defended that level here once again. So we can say that there's a strong support right around 459.70 in the case that we need an intraday support, 359.70. And so as long as NVIDIA is holding that level, we are safe to play calls. And then our next resistance in this case is going to be 468.80. Where did we get this point is going to be this rejection right here. In fact, it is 468.67. So we're going to place a resistance at 468.67. Let's write that out. Perfect. So now if NVIDIA breaks above this resistance, then it has a price target of around 476, which is a very critical level. And this is where this level right here is from the past. So now moving on to the next stock on our watches, which is going to be Tesla. Now Tesla, like Apple, did disappoint us on earnings, but Tesla has been correcting for quite some time, which means that it may be time for buyers to take up the range again or the trend again. But nonetheless, Tesla has some work to do. You can see that Tesla is still trading below the 20-day moving average, and it's right around that 200-day moving average, a little too close to it for our liking. But nonetheless, Tesla does look like it is building what seems to be a bullish flag, and as we've already mentioned, this is what a bullish flag looks like. By the way, if you don't know your patterns and you want this cheat sheet, we will leave a link for it in the description. But for now, let's focus on Tesla's shorter term trend and see how it followed through from our previous resistance and support points. And you can see that Tesla actually didn't change at all. In fact, since our last video, Tesla has stayed above our 215.50 support. You can see that it came down to it and tested it and bounced. However, it is still getting rejected at that 226 mark. So buyers are strong above 215.50, but they still need a breakout above 226 in order for them to start filling this gap from earnings and move towards these two price targets. Now, if Tesla fails at 215.50, it can definitely start filling the gap towards 206 to 208, but we won't turn very bearish on it unless the entire market momentum shifts back down and or Tesla moves below 197.85. All these setups that we're looking at are all dependent on how SPY acts, and they all move SPY up and down, and they are all a product of each other. And so this is why we always like to start with covering the index so we see what the overall market is doing, and then we move on to our watch list. Next stock on our watch list is going to be AMD. We actually caught AMD calls as a swing with our group yesterday into today, and we took away our profits this morning. We actually closed out profitable on this rally here. And you can see that AMD is doing also a great job of maintaining those highs from last week. And here are some critical levels to watch for AMD. First of all, if you have been watching our videos, you know that 112 has been a very critical resistance for us. And we've been wanting AMD to break out of this resistance for a very long time. And that's because this was the triple top rejection that AMD faced. And here's what a triple top rejection looks like actually. Let's go ahead and go through it with it. Triple tops usually are very strong bearish patterns, and you can see 1, 2, 3 rejection points before a sell-off. But if a stock comes around and breaks above the triple top, that means buyers regained control, and it will be very hard to give up that control once again. For that reason, our breakout support on AMD is 112, but notice that it tried to have a shakeout here, and it came down to around 110.20. So we're going to place another support at 110.20, which is now going to be our critical support. So if it breaks below 112, it's one thing, but if it breaks below 110.20, then we will likely turn bearish on the stock. And in that case, we can even move up our bearish trend or our bearish range towards this level here. And let's get away from this because this is a bit aggressive, and so we will be updating that in coming videos. And so for now, AMD now reached a high of around, let's see, 115.32, which means that this is going to be our next resistance and focus. 115.32. This is a very strong rejection. If so AMD can break above it, then it's very significant and it can rally towards that 119 to 120 mark, which has been our price target for quite some time. We are also holding an AMD position in our Hyper Wealth group as a long-term multi-month position trade with a very aggressive price target. Last but not least, we have Amazon, and Amazon has also been one of the stronger names when it comes to the call side versus the put side. You can see that there's a ton of open interest on the call side in the thousands, whereas on the open interest for the put side, it looks like it's only in the hundreds. Yes, some of the in the money puts are in the thousands, but as we get deeper and deeper into more expensive puts, there's not much activity going on. Keep in mind that open interest can change from day to day, so you should be checking the open interest at the open every single morning. So Amazon here on the daily chart, let's start off with that. You can see has been rallying nonstop. It almost reminds me of Microsoft. That's very close to breaking out of its all-time highs. And Amazon here in this case is close to its 52-week highs after a stellar earnings. And if you know anything about our power earnings gap strategy, which we teach in our course, we will also leave a link in the description for our course. But we teach this strategy in our course, and it is one of the most effective strategies that you can ever trade. It is a very profitable strategy, and it looks like it's working perfectly on Amazon. Amazon's moving averages are crossing up. The MACD is showing a positive green histogram, so that is a good sign. Here are some levels to focus on for Amazon. Of course, we haven't updated these levels since our last video. We had a resistance point placed at 139.37. Amazon broke above that, retested it, and continued pushing. And our next target was 143.60, in which you can see Amazon got rejected at perfectly. And so if you did play calls from our last video, you're a very happy camper. But now let's go ahead and clear out of these levels because it's already been broken above. And let's talk about some supports here. In this case, we need to bring our support down a little bit because the reversal looks like happened right around 138.90, and so we need to have a place of support at 138.90. Buyers need to maintain that level in order for them to maintain the bullish trend. And if it does break above 143.60, the next resistance we see for it is going to be right around 145.86, which was its all-time high in the last 52 weeks. Not all-time highs, just in the last 52 weeks, so the last year. So perfect, this is the last trend for Amazon, and so if it breaks above this level, we will be continuing calls, or we will play calls towards 145.86. And now let's cover VIX just to see where the overall volatility index. This measures the volatility, the implied volatility on SPY contracts in specific. And so here in this case, we see implied volatility on SPY contracts is a little bit lower than usual, and that's because VIX is dropping significantly, which means that it makes it cheaper for you to buy calls and puts on SPY. In this case, we can see that it's continuing to drop as SPY continues higher, which is a good bullish sign. And so overall, we are bullish on the market, and we are looking at a potential Santa rally this year. Santa rallies start around November sometimes and continue all the way through January. So overall, we are looking good. We are just waiting for SPY to finally confirm a breakout above that 438.60 level. So thank you guys so much for checking in. I hope you found this video helpful. Don't forget to subscribe and like.